The 10 fastest growing countries in the world, 7 are expected to be here in Africa. Joining us now to discuss whether levels of investment match that expectation is Razia Khan. She's head of research for Africa at Standard Chartered Bank, and it's always great having you, and I love having you in the flesh in studio, Razia. This idea of an incredible growth cycle that we're in, a third sort of a super cycle in world economics, what does that mean?
Well, what is a super cycle? Of course, Standard Chartered released its report at the end of last year saying that despite the global economic crisis, we are still, we think, in the midst of a global economic supercycle. What is that? Simply, it's any period of elevated growth. So we look at typical growth rates from around 1870 to the outbreak of the First World War, a lot of industrialization going on in mature economies at the time. We look at that post-war period, which saw the emergence of Germany and Japan, with global growth on average being somewhere around 5%. And we're saying, well, that kind of step up in the growth rate relative to what came before, even given the economic crisis. If we look at emerging markets, if we look at the regions in which Standard Chartered does business, Asia, Africa, and the Middle East, we see lots of signs that that super cycle is in place.
Okay, we're expecting that within the next 25 years, the value of the world economy will have moved from 64 trillion to about 126 trillion. But are those realistic figures? I mean, we're worried about a double dip recession.
Absolutely. And if you look through the supercycle report, it doesn't require very much in terms of the assumption for global growth to get us there. That is the key point. Now already we're seeing economies like China and India growing rapidly. Sure, in the near term there are concerns about potential slowdown. Everyone's looking to the risks posed by Europe. That's still dominant for the moment. Everyone's trying to work out what does this really mean for other regions in the world. But notwithstanding those near-term cyclical influences, we think there is an overall cycle where we're seeing a strategic shift in the balance of power from west to east. And economies like China, like India, and even sub-Saharan Africa are only going to become more important in terms of their share of global GDP.
I still want to challenge you on this one, Razia. Not only are we afraid of the potential double dip happening sooner rather than later, we're also looking at investors holding on to trillions of dollars, not really sure where to be investing their money. We're also seeing trade, although having improved in recent years, but we're not seeing a lot of national output at the moment because of the state of these Western economies, which still account for a huge component of global growth. So in the midst of high unemployment internationally, rising inflation, reticence to invest, all those are indicators of a super cycle, and they seem to be flying in the face of that theory.
Well, let's look very carefully at the actual evidence before us on global growth. Yes, the mature economies have seen a return of some growth. Europe is still growing, the US is still growing, but yes, in terms of the levels of growth, nothing to get excited about. But emerging markets now contribute more to the overall rise in global growth than the mature economies. And that's not a situation that we see coming to a screeching halt anytime soon. We're not saying that cycles don't matter. We're not saying that everywhere isn't necessarily going to be impacted by a renewed downturn should it come to that. But what we're saying is, if we go back in time, if we look at the relative importance of the very populous economies like China, like India, their share of global GDP, what we're increasingly seeing with these economies becoming more important again is really just a return to that situation that existed for much of history.
As we're seeing the center of gravity shift from east to west, where does Africa feature in this continuum?
From west to east?
From west to east.
This is a very key question. And in terms of Africa, we are seeing a lot of signs still that the super cycle is in place. Now, there's no question about it that near term, Africa might be vulnerable to any global downturn. A lot has been said about the policy buffers that Africa had in place previously. So 2008 fiscal balances, deficits were much smaller. Policymakers could put in place different measures to try to grow their way out of the crisis when it happened. And it's not so clear that they're enjoying the same level of fiscal health now. We see this right here in South Africa. Look to see what emerges tomorrow. But on the whole, there still is a structural shift that is underscoring African growth. The rise of consumption, this rise of the African middle class, the demographic boost to that growth. Africa has a young population. It's a growing population. People are consuming more. The working age population as a proportion of the total is going to be growing. And it's very difficult to argue that any global cycle is going to be overriding for Africa, is going to be the determinant of Africa's growth, when so much of the impetus is coming from reform in the domestic economy.
Somebody looking at Africa right now would say probably the economies most exposed are South Africa and Nigeria, just because they're open and they're larger. And yet what we've seen is widespread currency volatility, even in economies that just don't seem to feature on the radar. What does that mean?
Well, there's a lot of debate about this, of course. Pre-crisis, we all knew we had seen the discovery of frontier Africa by the hedge funds, so highly leveraged money, highly exposed to turns in global risk appetite. Lehman's happened. There was a great need to liquidate what they had wherever it was possible to do so. And frontier Africa, those small illiquid markets, suffered. Now, the thinking is that since then, in theory, we've seen real money, so pensions money, for example, much more patient capital, investors willing to invest for 2 or 3 years and just leave their money to earn a return. We've seen that becoming much more of a dominant flow than the typically more leveraged flow that was the case pre-crisis. But that belies the fact that we've seen a great deal of volatility in African FX markets in recent weeks. Now, it may be that the policy response and what central banks have tried to do to get on top of this has exacerbated poor liquidity conditions and caused wide swings in markets. It could be that even given the relatively small exposure of foreign investors, the fundamental flows have been pretty negative and Africa has been impacted. Ultimately, though, very interesting findings. Standard Chartered did an investor conference not so long ago. Over 70% of investors were still looking to increase their portfolio allocation to Africa, despite near-term risks.
I'm going to be killed, but no comment. On your 5 fingers, the greatest growth prospects in Africa are?
Very difficult to narrow it down, but clearly the populous countries. We're seeing a big change in terms of Nigeria, in terms of Ethiopia. Very different economies. It's not just the oil economies, it's increasingly countries that we don't necessarily associate with any commodity either. If we had to go for the very top pick in terms of the pure level of growth, Ghana. I've just come back from Ghana, huge amounts of optimism, and this looks likely to be sustained.
Razia Khan, always great having you. She's head of African research at Standard Chartered, talking to us about super cycles that the world is in, the third phase since the Industrial Revolution.